All right, Matt, the mortgage guy. In today's video, I'm excited to show you how I'm saving a client $776 a month. This 2-1 buy down in its latest version, the latest form, is a great product for not everybody, but those who do utilize this product. I think it's going to be a really good inflation buster, rising rates buster, whatever the heck you want to call it. It's going to be a great option for some people. Stay tuned. I'm going to show you exactly what I'm doing for a client. All right, Matt, the mortgage guy, residential mortgage broker. We're in 44, 45, 46 states. I don't know. If you're looking to reach out to me and work with me and my team, go to greatmortgagebroker.com, fill out the quick form. We'll be in touch within 24 hours. If you need to connect with an agent who's going to work with your mortgage broker to help structure a cool loan like I'm going to show you, go to homeandmoney.com/Matt. So for those of you who watched a video I made a few months ago, the first renditions of the rate buy down, I wasn't a big fan of. And truth be told, when it first came out, I thought it was just a way for higher rate lenders to kind of, get people's attention drawn away from the fact that their rates were higher. Well, everybody's rates are higher right now as interest rates continue to go up. The Fed continues to do what they do. And I've got so many clients that, truth be told, are just in a position where the monthly payments aren't comfortable at the price they're looking to purchase. So I never want you to stretch. I never want you to be in a position where mortgage payment makes you uncomfortable. But let me just show you, let me move my face here, exactly what we're doing for a client. You see for yourself if it's something that might work for you. If it is, great. If not, no big deal. The way this 2-1 buy down works is it's a seller concession, a seller credit, and they basically fund whatever you're saving in the first 2 years of this. This is a 2-1 buy down. I'll show you the exact example. Seller subsidy of $14,082 on this deal, right? And so what that gets my buyer is, rather than have the 6.5% that they had set up for this loan, they're going to get 4.5 in year one, 5.5 in year two, and then 6.5 in years 3 through 30. And some of you might think from the start, this sounds like an adjustable rate loan. Sounds like a bad idea. Sounds like, something that's risky. The risky part about it is that your payment starts lower, and you need to understand that your payment is going to go up. The thing that I like about it is that 6.5% rate, which is the rate that some people are getting into today for the next 30 years, there's no 7.5, 8.5, 9.5, 10.5 that comes with an adjustable, where they've got a ceiling of 9 or 10 or even higher, right? The 6.5 is the start rate. It's the rate you might have got anyway. And so in these first couple years, you're going to save significant amount of money. In this specific case, $41.25 a month with taxes and insurance and everything included on this $825,000 purchase in California. That's $776 less than the $49.01 payment. Then in year two, it goes to $45.03, and year three, it goes to $49.01. I will not promise that rates are going to go down, but what I can tell you is that there's a good likelihood that as inflation comes down, as the Fed, looks at that and their tightening policy, I'm listening to stuff every single day, right? The Fed is going to overdo what they're doing right now in 2022. They are likely going to have to U-turn at some point, course correct, lower interest rates. Mortgage rates are more than likely going to go down. Not immediately. I'm not telling you it's going to be down in 3 months, but maybe the end of 23, maybe the beginning of 24. You can go out there and get yourself a 30-year fixed at 4.5%, 4.99. I don't know, maybe lower. But in this case, the thing that I really like about this buy down is this $14,000 subsidy that's paid by the seller saves the client roughly, let's call it $9,400 in year one and $3,600 in year two. That's rough math, but it's close enough, right? If rates go down late 23 and this client's able to get themselves into a 30-year fixed at, let's call it 4.75, they don't just lose the subsidy. You know, they've saved over $9,000 in year one, $776 a month. Whatever's left over, it's sitting in an escrow account with the lender. It's going to get credited to the buyer in the form of a principal pay down. Meaning, if you owed $613,000 when you were refinancing, the extra $3,600 that's left over in the subsidy account is going to come off of that. It's going to reduce your principal balance, meaning you get that credited back to you. That's something that I think is really neat, combined with the fact that rates could come down. And I'm just going to use the word could. I'm not going to say will or probably or any of that stuff. Worst case scenario, you're in a 6.5% with this monthly payment that if you're not comfortable with that, you should not be buying at this price point anyhow. Quite frankly, this is what you're going to qualify off of, is this 6.5% interest rate. That's where rates are today, for a small cost on the buyer side. And so you've got a couple different ways to structure your loan. And I think that one other thing I'd like to mention, real estate agents and loan officers need to work together with clients to figure out loan structure. It's more important than ever. Affordable monthly payments, because maybe in your case, you can buy the rate down to 5.99 to get a 30-year fixed and you're done, right? And 5.99 in this scenario, let's plug it in, 46.96. And you're like, you know what? No gambling, no guessing. That's my rate forever. That's the payment I'm comfortable with, $4,700. I'm cool. Others are going to say, you know what? This rate buy down thing's kind of cool. $4,125, $4,500. I've got a plan that I already know I'm going to get a 5% pay increase in 2023 and another 5% in 2024. So I can budget accordingly. Whatever the case, structure a loan that works for you. Work with your loan officer and agent together, because then agent goes out and writes an offer. Here's the $825 purchase price. We'd like $15,000 in seller credits. $14,000 of that goes toward the subsidy. The other $1,000 is going to pay part of my title fees, whatever the case may be. So I like this. I'm excited to show this to clients that it's going to work for. It doesn't work for everybody. And like all loan products, some fit, some don't. Works for some, doesn't work for others. You know you better than any loan officer knows you or any financial advisor knows you. The best ones are going to pull out of you what your goals are, what you're looking to accomplish, and then put a loan product in place that fits those goals. All right. Hopefully this was helpful. Again, greatmortgagebroker.com. Fill out the form, connect with me and my team. We're licensed just about every state. homeandmoney.com/Matt if you're looking to connect with a great agent. Hopefully this was helpful. 2-1 rate buy down. It's going to be a good one.